Hey, we're back here with Kevin Davis of Kevin Davis Insurance, talking about the major insurance issues, the complications that came up with the Champlain Towers South collapse in Surfside, Florida. And we spoke about some different specific issues, different types of insurance, limits, who has what. And we talked about the line that is always there that helps us know how much insurance to get and who's insured for what. Let's take a little different tack here. Kevin, talk about what you think the future of insurance will look like for us with what we've seen or what we've learned from this unfortunate tragedy.
Well, it will be major changes because we've never had a situation where this has happened before. When I mean this has happened, I mean if there's a drowning or if there's somebody gets hurt, it's any kind of damage, physical damage or bodily injury, it impacts maybe one to a handful of people. But here, for the first time, 100 people died, and associations have never can imagine that happening. So as a result of that, as insurance underwriters, they say, okay, how do we make sure that we can provide the coverage that we won't lose everything we have? So what that means is, number one, you probably see higher rates, higher deductibles, and less coverage. Whenever there's a circumstance, whenever something happens in our industry, okay, those are one of the three things that'll happen. You'll see higher rates, less coverage, higher deductibles. You're noticing now with water damage claim. Water damage claims, you're putting $25,000 deductibles on certain things because, condos, there's water leaks everywhere. So you start to see more and more things in these high rises. You're going to look and see when's the last time they had an inspection. Do they have reserve studies? They gotta have a reserve study. And again, the number of condos out there with reserve studies are so small, it's not even significant right now. They have to have them. How can you budget anything without a reserve study? So I think that we
Starting
will
to sing my song.
Well, I'll help you out here because right now, how can you budget? How can you maintain the common area? I mean, if we look at the kind of claims that we see, most of the claims are for maintenance. You didn't trim the trees. You didn't do, by not trimming the trees, it blocks the stop sign. So you can't see the stop sign, so you have accidents. Okay. There's certain things that we notice because of poor maintenance. If you maintain the property, you have less losses. So we want to make sure that you maintain it. We're going to look at things to see that you're maintaining. If you don't, the rates will get higher and higher and higher, and you have less coverage. We see it right now happening, the things that we're asking for in terms of where you live at. Are you east of 90? Again, when we talk about east of 95, we know we have more issues there than west of 95. West of 95 are mostly homeowner associations, and you have condos there where for some reason we see or less exposure than we have east of 95. And the same thing, I-5 from Washington all the way down to the tip of California.
Yeah, San Diego.
Know that those are the issues. So in those areas, we got to be more careful. Areas like Chicago, certain part of Texas, but most of the Midwest, a lot of the South, like Georgia and those, we don't have those kind of issues. So what we're doing is looking at it and say, there's more exposure here, then we have to use certain things than if there's different exposure in other areas. So it's really right now, every insurance carrier right now is looking at it and saying, how are we going to handle these condos out there? Because right now we're having an issue. Not because the building came down, the building exposed to us the maximum probable loss that we can have that we never thought before.
Yeah, the problem is bigger than
we could even imagine. And on top of that, you also have, again, social inflation where the lawsuits are bigger. So you're not talking about a $10,000 slip and fall anymore. You're talking about an $80,000 or $100,000 slip and fall, or a $5 million award now is a $10 million award. So right now, our industry is being looked after. And one more point, people who for the past 2 years, we've been living in our community association. We used to get up in the morning and go to work and come home when it's dark. Now we're working and looking outside our window and we're seeing things that the board didn't do. They didn't maintain the common area. We look at the property as not maintained properly. We see the fences that are worn now. We're seeing the pool that's been taken care of, and we're seeing things that we don't like. So now we're challenging board authority more than we ever did before because we're living there. We're there 24 hours. So The exposures of community associations has changed over the past couple of years, magnified by Champlain Towers. It is really becoming a problem to us as insurers to say, what are we going to do about it? So there definitely will be something happening in the future, and you'll start seeing it in January.
Yeah. Well, just hearing you talk makes me think that, yes, I can imagine the insurance carriers, somewhere there's someone who figured out what is the chance of someone drowning in a pool.
Yes.
One loss. I don't think any one of them were thinking 100 people, and just the scope of potential change or potential loss just did not enter the conversation. And then you mentioned it just a moment ago, talking about maintenance. The tree that grew too big and now covered a stop sign, or a leaky hose valve on the pool deck that drip, 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 and now it's slipped and someone slips and falls. Those are maintenance issues. There's another element of that I think of, which is slow deterioration. It's one thing for a tree to fall and break the roof. It's another thing for the roof to just gradually deteriorate over 20 years, arguably on schedule. So what I think of is insurance is for accidents, not for things that the board could have controlled with maintenance. Is that fair?
That not only is fair, but it's a great way of looking at, as insurance professionals, as insurers, we're saying, where's the exposure today? Champlain Towers told us that the exposure now is deferred maintenance. Because historically, if you have deferred maintenance and you have a slip and fall, or you have, like I said, you're looking outside your window and you see the fence have been deteriorating. Okay, you see a deterioration of the sliding. Now, so you put a claim in. Well, wait a minute. When did it actually occur? When was the occurrence? Okay, when did it happen? And you don't have like occurrence date because it's been it's been happening something over 20 years. So now all of a sudden the GL policy can say, because GL is based on an occurrence. When we knew the building went down, that's an occurrence. Yeah. But let's say the building never went down. And now all of a sudden you're just suing the board of directors because there's been deferred maintenance for 20 years. Well, the GL policy says, wait a minute, we need a date something happened. What was the trigger date of it? And then the DL policy will say, wait a minute, you're suing the board because they breached your fiduciary duty, but it's for property damage, so something's not covered. So right now, the deferred maintenance is a major problem because it's not insurable. You can't insure deferred maintenance at all. Because we can look at it, we can see it, we see it happening, we can tell the board to do something about it. The board has to do something about it because there's no coverage until it really becomes a serious problem. And then it becomes a serious problem, it becomes so serious that the carrier can say, here's the $10 million, here's $15 million, here's everything, and walk away. And your board's still sitting there with, what if I'm sued tomorrow?
And you talked about peace of mind. And I don't think anyone would want to be in the position of knowing that they passed a budget that did not have sufficient maintenance and therefore something happened. And that is the opposite of peace of mind.
Yeah, exactly.
Yeah. Insurance is for accidents, not for the decisions that I make, willful decisions that I make. Or decisions you don't make. Again, board is looking day in and day out at the deterioration of that property. If a unit owner sues them for that deterioration of property, where's that coverage coming from? You know, the D&O policy said deterioration of property is excluded. The GL policy picks up deterioration of property as long as there is an accident that has to occur. You know, again, with Champlain, deterioration of property led to the building falling down. The falling down date was the date of the occurrence. They can say, okay, we see it happened. That was an accident. It happened, and they pick it up from that date. But deferred maintenance itself, by itself, the trees not been trimmed, the fences are falling down. You know, there's cracks everywhere. Boy, you have to do something about them suing you. No coverage. I can't say no coverage at all. Potentially no coverage because again, it has to be an occurrence and it has to be other than bodily injury and property damage. Yeah. You can't blame insurance for the sun coming up and down every day, for a little bit of rain, for a little bit of salt air, for freeze thaw cycles. Mm-hmm. That's just normal stuff that the board of directors should be taking care of.
Yep, that's it.
Fascinating. Well, Kevin, this has been a wonderful time to spend a little bit of extra time with you. I'm sure that Well, I just know, and that's why we called on you. You're a rich resource, and you're a tremendous asset to our industry. Kevin Davis from
Excellent.
Kevin Davis Insurance, thank you very much.
Appreciate it. Take care.